because there is no way that someone didn't buy Bitcoin, then somehow release this fake news and make money on it. I'm just being honest with you. This stuff doesn't just materialize out of thin air with no one having some...
Did someone just manipulate the Bitcoin market with fake news? That's the question everyone is asking after a mysterious pump and dump incident on October 17, 2023, caused the price of Bitcoin to spike by 7% in minutes. In this video, we'll take a closer look at what happened, who might be responsible, and what it means for the future of Bitcoin. Here are some of the key points we'll cover. What is a pump and dump scheme, and how does it work? Why is Bitcoin particularly susceptible to pump and dump schemes? What are the potential consequences of this incident for the Bitcoin market? What can investors do to protect themselves from pump and dump schemes? We'll also hear from some of the leading experts in the cryptocurrency industry to get their insights on this important story. So, if you want to know what really happened on October 17th, and what it means for the future of Bitcoin, be sure to watch this video. Subscribe for Bitcoin news, analysis, and pump and dump protection. And let's get started.
So the next big story we're covering is the pump and dump. I'm calling it a pump and dump, guys, because there is no way that someone didn't buy Bitcoin, then somehow release this fake news and make money on it. I'm just being honest with you. This stuff doesn't just materialize out of thin air with no one having some ulterior motive. Now, Cointelegraph is the one that broke this. I don't know, and again, it broke the fake news, so it's whatever it is. But obviously, this is, and I'm just going to be flat honest. If you go on crypto Twitter, X Twitter, whatever you talk about, there is a lot of animosity towards the SEC and Gary Gensler. And listen, I can understand that. The crypto space wants the freedom. They don't want to be hampered. They don't know the rules to the game of crypto, like what is a security, what's not, what's this, what's that. But at the same time, when you see a move yesterday like this, and it turns out to be caused by news that the fake news, and let me say this again, fake news that basically the Bitcoin ETF, the spot ETF, was approved, this is honestly kind of why you need the SEC. There needs to be an investigation by the SEC into this to find out who was placing big bets on Bitcoin. And remember, when you're in the crypto markets, you can use like 100x leverage. So you can literally put a very little money up, and if you get the move to go in your direction, you can make millions of dollars off of a very small amount of money. Essentially gambling, but not in this case, because you were, or whoever this was going to filter this news through, or fake news, and get it to pop. All right, so when we look at this chart, though, if we remember yesterday, and this is fascinating, what was my bias yesterday in the game plan? What was the chart telling us? Well, remember we had this right here. We broke below it, but we stayed above this trend line, right? We had this trend line all the way up here, all the way up to these levels, and all the way up there. And what I said to you, especially as we were starting to move back up, and at that point yesterday, we were probably getting back, I think we were back in that range, is that even when we were down here, you still had a positive bias, a neutral to positive bias. Once you recapture here, you then have a positive bias for a target of at least 29,000. Well, what we saw in Bitcoin yesterday is it went to 30,000. Now, it did reverse, and it did come back down, but the point is, again, is that weirdly enough, the chart kind of was telling us that there was still a positive bias on Bitcoin and to expect a move up. I didn't know this move was going to come. Obviously, I would have made a lot of money if I did. But nonetheless, that was an amazing move yesterday. And listen, the spot ETF is going to get approved. But going back to the whole discussion before, the question you have to ask ourselves is, when this happens, when fake news causes, on a $500 billion asset, a move of 7 to 8% in minutes, is it going to push the SEC to approve a spot ETF? Is it going to convince more people to join in and start investing in crypto? Or is it going to hurt crypto? And that's the sad part about this. But this was someone out there that for a gain for themselves ultimately hurt the crypto markets. Because again, if you're a grandma and you're looking at this and you hear about fake news and you see this whip, are you going to be like, oh yeah, let me go open a crypto account? No, you're not. You're going to be like, holy cow, this is shady. Let me stay away. And the same thing with the SEC. Now, do I think that ETF, spot ETF, is going to get approved? Yes, eventually it will. but it certainly doesn't help getting it approved sooner. I will say that. All right, so right off the bat, what do we see? We see yields pushing up, but we still have not taken out those highs. What has the dollar done? Take a look at the US dollar. This is the intraday 10-minute chart. Notice the move to the upside here. That's on the back of those retail sales numbers. And let's be honest here. We know that the consumer has over $1 trillion in credit card debt, more than any time in history. But what we are clearly seeing from the retail sales numbers is that the consumer is having a hard time going back to pre-pandemic spending before they had a lot more money. And again, that is causing them to spend, and run up debt. Now, right now, that helps the economy, right? It keeps the economy strong. Is it sustainable, though, right? Think about that. How long can this go on with the consumer racking up debt after debt after debt until we see something collapse or something give way? We see, again, defaults. Defaults now are at levels that we haven't seen since basically the beginning of the pandemic. So we are at levels, guys, when people were losing jobs left and right, when things were collapsing. We are now at those levels. So things, again, to me, I look at this as a slow train wreck. The numbers, a lot of the numbers, jobs numbers, other things, they're still staying strong, but we see cracks, we see defaults rising, we see debt rising, things that ultimately are unsustainable. You can go up the ladder to the U.S. government, $33.5 trillion in U.S. debt now. That, again, is unsustainable as well. It will ultimately have to collapse. The question is not if, it's when. Back over to this chart. Now, this is the S&P 500, and what we're doing is we're going all the way back to the 80s. All right, basically, I don't know if you can see this over here, but this is the stock market crash of 87. And again, my point of showing you this big time frame, and we're going to spend a little time on big time frames because you'll find this fascinating like I do, is to showcase basically the trend of the market going back. And then here was the dot-com bubble, the real estate bubble, and then where the Fed began printing money, look at what the markets did. Now, the reason why I want to show you this is because a lot of people are saying, oh, we can go to new all-time highs, we can continue this bull market. I'm not saying you can't hit all-time highs. There's always a chance of that. But what I am seeing here, and I think we can all agree, is that if you look at the longer-term trend of this market, do we think that the markets in the longer term, when I zoom out to go to the 1950s, do you think that this move, which dwarfs, this was the market all the way up to the dot-com and then to the financial crisis where the Fed intervened and printed money. And my point of this is that if you look at the trend, the long-term trend of this market, what are we actually doing here? All right, well, if you look at the long-term trend, you could argue that you have a couple trend lines here that potentially are telling you that we could be in some major trouble. And again, this is something that would be the greater kind of evil kind of situation where you got an epic depression. But if this happens and you saw a retrace to these levels, and I don't think it's totally out of this world, you're looking at a longer term trend through this low here that actually takes you down to 12 to 1500 on the S&P 500. Now, for me as a trader, there's no way that I'm ever investing and going short for that target, right? There's too many levels along the way to be in, be out, and this could ultimately take a long time to kind of foresee. But I do think it's important to recognize that we are coming into the 100-year cycle of the Great Depression, right? 1920.